Okay, let's dive right in. There's a pretty stark warning making the rounds about the US dollar, and its recent weakness is sending some serious shockwaves through global markets. We're talking everything from gold to Bitcoin. So yeah, let's get into it. And we're kicking things off with this really urgent message from none other than billionaire investor Ray Dalio. He's basically saying that a collapse of the dollar, something people have predicted for ages, isn't some far-off what-if scenario anymore. He thinks it's a present reality, like it's unfolding right before our very eyes.
So here's how we're going to break this down. First, we'll look at the warning itself. Then, we'll dig into what just triggered all this market nervousness. After that, we'll see how assets like gold and Bitcoin are reacting, and it's pretty interesting. Then we'll touch on the deeper economic fears at play here, and finally, we'll try to piece together what this all means for the dollar's future.
All right, first up, let's really unpack what Ray Dalio is getting at here. His whole argument is that what we're seeing isn't just random chaos. Nope. He says it's part of a predictable cycle, something that's actually played out many times throughout history. So Dalio points to these 5 massive forces. He actually laid them all out in his book. We're talking about things like huge economic cycles, debt and capital markets rising and falling, internal conflicts over wealth and values, and of course, great power struggles, like a new power challenging the old one. He argues that all of these are converging right now. He literally calls it a perfect storm that could signal the end of the US dollar's dominance and, potentially open the door for a new China-led era. Okay, so you've got this big, long-term theory from Dalio. But what's really fascinating is how a very specific, very recent geopolitical event has acted like a spark, taking that theory and making it feel incredibly immediate.
And what was that trigger? Well, it was a fresh threat of tariffs against NATO allies, all centered around the deal for Greenland, of all things. That one move was enough to cause a really sharp sell-off of the US dollar. In fact, the US dollar index, which measures its strength against other big currencies, dropped to a 6-week low.
And here's the thing. This isn't just some random, one-off event. This is all happening against a backdrop where the dollar had already lost almost 10% of its value in the past year. So this just amplifies the concern that this weakness isn't a blip. It's part of a much bigger, more worrying trend. Now this is where things get really fascinating. The market's reaction. You have these 2 assets that are often seen as safe havens, right? Gold and Bitcoin. But in response to all this dollar uncertainty, they've gone in completely, dramatically different directions.
Just look at this split. It's wild. As fear about the dollar started to climb, you see money just pouring into gold, pushing it to a fresh all-time high. But at the same time, Bitcoin, it plummeted, dropping from around 96,000 down to 90,000. It got sold off hard. The big question is, why?
Well, according to one analyst, Alex Kupsakevich, Bitcoin is basically taking a double hit. Because it's become so intertwined with the US crypto industry, its fate is kind of tied to the dollar now. So when you get this sell America trade happening where investors are dumping US assets, Bitcoin gets pulled down right along with them. It gets treated like another American risk-on asset. Meanwhile, on the flip side, the outlook for gold is just so strong that some analysts are now saying a price of $5,000 per ounce is totally within sight. That's a huge number, and it's just such a stark contrast to what we've been seeing with Bitcoin, isn't it? Okay, so this market turmoil, it's not just about charts and numbers going up and down. It's all connected to a much deeper, more fundamental economic fear. It's a fear that combines, really, the worst of 2 worlds.
And that big, scary threat that has economists so worried, it's the return of stagflation. Now, that's a word we really haven't heard thrown around much in recent decades, but believe me, it is back in the conversation in a big way.
So what is it? Well, stagflation is a truly painful economic condition. Just imagine this. The economy is barely growing, maybe even shrinking, so unemployment is high and jobs are hard to find. But at the exact same time, prices for everything, gas, groceries, you name it, are rising. It's a total nightmare scenario that just squeezes regular households and businesses from both sides.
And believe me, the alarm bells on this are already ringing, loudly. The Federal Reserve's favorite way to measure inflation, the PCE index, is now expected to come in higher than anyone thought. You've got major banks like Barclays and Morgan Stanley already raising their forecasts. It's a clear signal that these inflationary pressures are really starting to build.
And this is where it all comes together. You have prominent investors like Schiff who are connecting these dots directly. He's basically saying, look, a collapsing dollar is going to send consumer prices through the roof. And what does that get you? He calls it unprecedented stagflation. He's not mincing words.
All right, so let's pull all these threads together now and really look at the bigger picture. And more importantly, why any of this matters to the global financial system that, well, we all rely on.
What we're really witnessing here is a kind of perfect storm, right? You've got Ray Dalio's big, long-term theories about historical cycles crashing into a very real short-term geopolitical trigger. You've got markets reacting in ways that seem to contradict each other, and you've got this ghost from the past, the fear of stagflation, suddenly re-emerging. All of these things are converging, and together they are shaking the very foundations of the dollar's dominance.
So in the end, what we're left with is this incredibly complex web of forces. Everything from massive, long-term debt cycles to short-term, headline-grabbing tariff threats. And they are all putting an immense amount of pressure on the US dollar. It leaves us with a really critical question, not just about the dollar, but about the future of money itself. Is the world's reserve currency, the one that has dominated global finance for decades, really on the brink?